Welcome, tech enthusiasts, to another electrifying episode of the Tech Stocks Daily Podcast, where we dive into the buzzing world of technology stocks and market trends. Today, Google made headlines, but not for the reasons one might expect. The tech giant found itself in the news due to a burgeoning hoax claiming that Gmail, one of its flagship services, was shutting down. This rumor, unmistakably a deliberate hoax, took off on Twitter with a forged announcement screenshot causing quite the stir. Despite quick efforts to quell the misinformation, the claim had already made Gmail a trending topic across Twitter and other social platforms like Facebook. The rumor seemed all the more credible to some because of Google's history of discontinuing products, even popular ones. Interestingly, while the Gmail shutdown rumor was spreading, Google was, in reality, announcing the discontinuation of Google Pay. The situation highlights how swiftly misinformation can spread and the importance of verifying news before sharing. All in all, it was a day marked by confusion and clarifications, demonstrating the impact of social media on information dissemination. In today's financial news, NVIDIA found itself in the spotlight due to a significant surge, not just in its stock value, but also in its performance, primarily driven by the skyrocketing demand for AI chips. NVIDIA reported an overall gross profit of $2.03 billion, an impressive 22% increase, slightly ahead of the FactSet consensus of $1.97 billion. Even more, the revenue hit the mark at $5.77 billion, beating the expectations of $5.70 billion projected by analysts. The first quarter looks promising as well, with NVIDIA modeling $2 to $2.02 billion in gross profit, aligning closely with analysts' projection of $2.1 billion. Additionally, for the full year, NVIDIA's guidance suggests at least $8.65 billion in gross profit and at least $2.63 billion in adjusted EBITDA, surpassing analysts' expectations again. The company has cautiously noted, however, that this optimistic outlook is predicated on the absence of further macroeconomic deterioration, which could otherwise adversely affect results. Block Inc. Class A common stock was in the spotlight today, capturing attention with its financial performance report. The company revealed an overall gross profit of $2.03 billion, marking a 22% increase, which slightly exceeded the FactSet consensus expectation of $1.97 billion. The reported revenue stood at $5.77 billion, surpassing analyst forecasts of $5.70 billion. Looking ahead to the first quarter, Block Inc. anticipates a gross profit between $2 billion and $2.2 billion, closely aligning with the analyst projection of $2.01 billion. Furthermore, the company sets its sights on achieving $570 million to $590 million in adjusted EBITDA for the first quarter, which is ahead of the consensus view of $520 million. For the full fiscal year, Block Inc. is guiding towards a minimum of $8.65 billion in gross profit and a minimum of $2.63 billion in adjusted EBITDA, once again outperforming analyst expectations, which were set at $8.75 billion and $2.40 billion respectively. However, it's important to note that this optimistic outlook is based on the presumption of no further macroeconomic deterioration, which could potentially impact results. Today, Intuit Inc. the Ford's common stock grabbed headlines due to its announcement projecting weak earnings. The company underscored a particularly challenging tax season as the primary culprit behind its less than stellar financial outlook, highlighting a low number of customer additions as a key factor. This revelation has certainly caused a stir among investors and market watchers alike, as Intuit, known for its financial and tax preparation software, including TurboTax and QuickBooks, usually benefits from the annual tax season. The news presents a stark reminder of the challenges even well-established tech firms can face, and underscores the importance of staying adaptive in an ever-evolving market landscape. Wrapping up today's segment, Microsoft also found itself in the spotlight, but for more somber reasons. The tech behemoth announced significant layoffs, attributing the decision to overstaffing issues in a rapidly evolving market landscape. The move will reduce Microsoft's workforce to just about 120,000 employees. This major shift reflects the broader challenges facing the tech industry, as companies adapt to market changes, technological advancements, and evolving business strategies. We'd love to hear your thoughts on today's tech stock moves, especially the surprising news from companies like Microsoft. What do you make of these developments? How do you think these changes will impact the tech industry and the market at large? Drop your comments and let's get the conversation going. Engage with us and share your insights. Based on today's reporting and the array of news from the tech sector, the overall market sentiment appears to be a mix of cautious optimism and underlying uncertainty. On one hand, we have NVIDIA and Block Inc., which have both outperformed expectations with their recent financial results, driving a sense of optimism regarding the demand for AI technologies and financial services, respectively. These positive developments suggest areas of growth and potential within the tech industry, underlined by strong demand and strategic alignment with future trends. Conversely, the news from Intuit Inc., projecting weak earnings due to a challenging tax season, and Microsoft's announcement of significant layoffs, citing overstaffing and a shifting market landscape, injects a note of caution and casts a shadow on the optimism. These developments highlight the challenges even leading tech companies face in adapting to changing market conditions and operational inefficiencies. Overall, the market sentiment today reflects a tech sector at a crossroads, where innovation and growth opportunities coexist with operational adjustments and strategic recalibrations. Investors and stakeholders are likely to tread carefully, balancing their enthusiasm for sectors showing robust growth potential with a keen awareness of the broader economic challenges and the need for operational prudence. The mixed news underscores the importance of strategic flexibility and resilience as companies navigate the complexities of today's market landscape. If I were to pick one stock from today's news, it would be NVIDIA, given its recent financial performance and the current market dynamics. Based on the information available today, my inclination would be to hold the stock. The rationale behind this decision stems from NVIDIA's impressive financial results, showcasing a significant surge in demand for AI chips, which not only beat Wall Street's expectations, but also hint at a solid growth trajectory for the company. The overall gross profit of $2.3 billion, marking a 22% increase, and revenue at $5.77 billion, surpassing analysts' expectations, demonstrate NVIDIA's strong market positioning and the burgeoning demand in the AI technology sector. Holding on to NVIDIA's stock appears to be a strategic move, especially for those looking to capitalize on the long-term growth potential of AI technologies. NVIDIA seems well poised to continue benefiting from the expanding applications of artificial intelligence across various industries, which could drive further revenue and profit growth. However, it's crucial for listeners to remember this analysis is based on current news and market sentiment and should not be taken as personalized financial advice. In conclusion, today's market activity offered a vivid snapshot of the dynamic and ever-evolving tech landscape. From the shocking hoax surrounding Gmail's rumored shutdown and NVIDIA's impressive surge fueled by AI chip demand, to Block Inc. exceeding financial expectations and the cautionary tales of Intuit's weak earnings projection and Microsoft's significant layoffs, today's news underscores the multifaceted challenges and opportunities within the tech sector. Remember to like, subscribe, and share this video with others who would appreciate a concise and engaging summary of the day's tech stock movements. Be sure to return tomorrow for another video where we'll continue to unravel the complexities of the market, providing you with the insights you need to stay informed. See you then.